Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 23rd of February. FOMC minutes show little urgency for a March hike. The US dollar slid yesterday after the minutes from the latest FOMC policy meeting disappointed those who were looking for hints that a March hike is underway. Although Fed officials expressed confidence that a rate increase may be appropriate fairly soon, this was tempered by other comments that the Fed would have ample time to respond if inflation emerges. On top of that, several members continue to be concerned about the downside risks to economic activity associated with further appreciation of the dollar. With regards to Trump's fiscal promises, policymakers noted that the uncertainty surrounding the subject should not deter the committee from taking further steps in removing policy accommodation. Nevertheless, some were mindful that adjusting monetary policy in anticipation of these policies might have different consequences than currently anticipated. All these points combined passed a different message to market participants than the one they got from Yellen's testimony last week. As such, the dollar weakened and the probability for a March action has ticked down. According to our model, which is based on the yields of the Fed Fund futures, the probability is now 26% versus 28% yesterday. Dollar yen slid as soon as the minutes were out to challenge once again the 113 support territory. If dollar bears remain in charge today and manage to break that barrier, then we expect them to aim for our next support of 112.60, defined by the low of the 17th of February. However, although there is the possibility for further declines, the short-term path of the pair remains sideways. The rate has been oscillating between 111.60 and 115.50 since the 11th of January. We would like to see an escape from that range before we assume a forthcoming trending direction. Moving now to Eurozone, yesterday veteran French centrist François Bayrou announced that he will not run for president and offered his support to the independent candidate Emmanuel Macron. According to the polls, Bayrou's support was only 5%, but his withdrawal gives Macron a significant boost towards victory. Euro-dollar spiked higher on the news after it hit support near the 105 territory, got another boost later in the day from the Fed minutes, and stopped near the 105.70 line. Anything that reduces or at least not increases the possibility of Le Pen becoming president is seen as positive for the common currency. The combination of that and the disappointment from the Fed minutes may keep euro-dollar supported for a while. A break above 105.70 is possible to challenge our next resistance of 106. Nevertheless, we don't expect any further recovery to develop into a strong bull run, given that we still have a long way to go before any election outcome is certain. A fresh poll showed that Marine Le Pen has increased her lead in the first round, which proves that Europe's political risks have nothing but diminished. However, the common currency did not react to that poll, as the far-right leader is still expected to lose by a large margin in the runoff. With all this uncertainty still in place, we expect Euro bears to take charge again soon and drive the battle in euro-dollar back down for another test near 105. As for today's events, during the European day, we have a relatively light calendar in terms of economic releases. From Germany, we get the final GDP figures for the fourth quarter, as well as the GfK Consumer Sentiment Index for March, though neither of these indicators is usually a major market mover. In Norway, the oil investment expectation survey for the first quarter is due to be released, though no forecast is available for the figure. Considering the nation's heavy reliance on oil exports, this number will be closely watched. We see the case for oil investment expectations to have risen from the previous quarter, given that oil prices have remained elevated in recent months following the OPEC consensus. Something like that may bring NOK under renewed buying interest. From the US, we get initial jobless claims for the week ended on the 17th of February. The forecast is for the figure to have ticked up, something that could bring the four-week moving average down. We have two speakers scheduled for today, ECB Executive Board member Peter Praet and Atlanta Fed President Dennis Lockhart. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.